Hi guys, it's Mark Shawzin, the pattern trader here. Is the US dollar about to collapse? And if it does, how would you profit from it? I will answer both of these questions in this video, plus you'll discover how you can do it as a complete beginner.
And within about a week, I could see this is something I can put a little bit of real money into. And when you're following a system, you should follow it.
And from $300 to $1,105 in 7 months.
Correct.
So I started with 2,500, and I've had 128% growth. You've got to give it everything. He's got the track record. They can just go on the website and see his history.
His way of trading is brilliant. He uses chart patterns.
After working on Wall Street for 23 years and managing private client accounts for the past 13 years, I've seen a number of miracles happen over time. And another miracle is about to unfold. At one point in the near future, the dollar is going to collapse. I guarantee it, and I'll prove it. Wait, put down your pitchforks. I'm not predicting the end of America or a complete collapse in government or some cooked up conspiracy about the Federal Reserve. Those things may or may not happen. I have no idea, and I don't care either. Once you understand the content in this article, you'll feel the same, because you'll know how I am planning to profit from the coming dollar collapse. After 120,000 trades, 1,200 trading accounts, and 8 Wall Street firms, I'm going to give you an exact guide to profit from the impending dollar devaluation. Number 1. There is only one secret to currencies. Miss this, and you might as well burn your savings on the barbecue. Currencies are different to stocks. Very different. The currency markets are referred to as the world's biggest casino. Sure, you can make life-changing money, but you can also lose it twice as fast. And the reason is because uneducated investors treat it the same as the stock market. I promise you that once you understand that difference, you'll be able to predict where the currency market is going to go, including a dollar collapse. And it is actually surprisingly simple. Below is a price chart of the S&P 500 going back 10 years. What do you see? Well, even with the worst crash in living memory, the 2008 banking crisis, price is still steadily going up. In fact, if we peel back to the last 70 years, you'll see this. Generally, stocks go up over time. I know that's an oversimplification, yet when you look at the big picture, it is obvious. You buy as low as you can, hold on for dear life, and hope the thing goes up. Currencies are different, and it makes them surprisingly easier to profit from, in my opinion. Here is a chart that shows the value of the euro compared to the dollar over the past 10 years. Do you notice the difference? Unlike the S&P 500, the price of the euro keeps trading back to the mean, the average price. Unlike a company or a stock, a currency does not usually sprint to zero, nor does it skyrocket in value. It almost always, eventually, trades back to the mean. Please note that I'm only talking about stable countries with a free exchange rate. Let's take a look at another example. This is the value of the US dollar versus the Australian dollar. Again, it is roughly the same price as it was 10 years ago. And here's another one, the US dollar versus the Japanese yen. Are you starting to see the glaring difference here? Price eventually always trades back to the mean. The mean is also known as the average, whereas the stock market tends to continue to rise. There is a constant ebbing and flowing since currency fluctuations are influenced by many factors. Interest rates, GDP figures, trade balance, political stability, unemployment figures, etc. However, you don't need to know any of those figures if you want to profit from a dollar collapse. These charts tell us everything we need to know. Since price tends to go back to the mean or the average, can you see how it would be easier than predicting price movements of the stock market? You bet. Number 2. You must do the polar opposite of successful stock investors. Retail traders and successful investors try to take what they've learned in the stock market and apply it to the forex market. Forex is another word for foreign exchange, also known as currencies. That's dead wrong. You need to do the polar opposite of what pros are doing in the stock market. That includes Warren Buffett, successful hedge fund managers, and famous Wall Street analysts. I used to rub shoulders with these guys, and they'll tell you the same. Instead of buying low and selling high, you need to trade a currency back to the mean. In other words, picking a high or low in the Forex market is near impossible. You need to wait for specific signals which indicate prices moving towards or away from the mean price. If this sounds a little too complicated, then don't worry. It'll be crystal clear in a minute. Let me explain all of this in one clear sentence. If you know a currency is going to return to its normal range, the best thing you could do is find out when it is outside of its range and then trade it back to its range. And if you place a trade before price moves back to the range, you could make a big fat profit. I'll show you examples of these kind of trades in a minute. Number 3, the coming collapse. Now, before I show you examples of trades I've taken using this exact hypothesis and the profits I have made, you must know what the collapse of the dollar will look like. Otherwise, this all will be for nothing. It is no secret that you are a cut above the rest. Truly, you are. You are smarter than the average individual in your city or town, and you know it. Just think about the kind of person you are. You are 1,000 words into a complicated article about major currency fluctuations, and you're doing it in your spare time while everyone else is binge watching TV, drinking coffee at Starbucks, or sleeping. And because of that, you are about to understand the words on this page better than anyone. Imagine everybody watching the big dollar collapse on the news. Everybody is up in arms because the dollar fell by 10% against other currencies in a short space of time. And don't kid yourself, it takes $15 trillion in volume to move the dollar by that much. In case you didn't know, the Forex market is an $8 trillion per day market. It dwarfs the stock market. So while everyone else thinks the dollar is collapsing, you know it is simply moving back to its mean. You knew before anyone else that this was going to happen because you don't think like a silly stock trader. Here's an example of what seems like a currency collapsing. Last year, these were the headlines where Australia was concerned. Here's what really happened during that time. What does this mean in simplistic terms? Well, it used to cost $1.07 US dollars to buy $1 Australian dollar. In other words, an American needed to fork out $1.07 to buy $1 Australian dollar. Then came the collapse. After the big drop, an American only had to fork out 69 cents to buy $1 Australian dollar. The Aussie dollar became cheaper for the Americans, and the US dollar became expensive for the Australians. And the media were fearful that this was just the start. Yet you and I know different. This is a simple return to the average price. Price shoots up and then shoots back down, oscillating over time. Remember the 10-year chart I showed you of the Australian dollar versus US dollar? Well, here it is again. Yep, the big collapse was nothing more than a return to the mean, or average. Yet the media went into a tailspin about it. I took several trades during the so-called unexpected collapse. Number 4. When is the US dollar collapse going to happen? The best way to analyze the dollar is by looking at something called the dollar index. The dollar index is a measure of the dollar's strength compared to a basket of other currencies. That includes the British pound, euro, Australian dollar, Swiss franc, yen, and a few others. It essentially gives us a very accurate snapshot of how valuable the dollar is compared to all other major currencies. Here is the chart for the dollar index going back 10 years. For 7 years, it traded within that range. Remember, currencies always trade back towards the mean. Right now, the US dollar is way above that. If price suddenly fell back to the lower end of the initial 7-year range, the media would be calling it a collapse. Check out the image below. That is a huge fall, yet it wouldn't be impossible at all. The dollar was there in 2011, and also in 2008. It would be nothing new, yet everyone would panic. Not you, though. You are expecting it to retrace back towards the mean at some point. You won't be caught off guard or surprised at all. So when is it going to happen? Well, to answer that, let's go to the previous 10 years, starting at 1997. Here's the chart for that period. During this time, the dollar lost 33.5% of its value against the world's currencies. There was an even bigger move down if you compared the dollar to only the Japanese yen. During that time, everyone was saying that America was in a massive decline. The media kept going on about China and how they were stealing jobs. A bunch of products came onto the market showing you how to protect your savings by buying gold. Now everyone is saying the opposite. China is slowing down and it's all about America again. Funny, isn't it? It's pretty nice to be in the know. Right now the dollar is actually below its 2001 peak, so it might keep creeping up for a while, or it could switch direction and fall. Either way, you're going to be there to profit from it, and I'm going to show you how. Right now, there are two currencies that are about to crash in the next couple of weeks and months. I made a detailed video about it that you can watch. Simply click here or in the description and you'll be taken to a page that looks like this. Simply add your name and email and you'll get the video and a bunch of other cool things. Also, if you like these kinds of videos, subscribe to my YouTube channel. Remember to click on the bell and opt in to be notified when I'll be releasing the next one.